we get that knee-jerk move lower, but we're down to an important level. Let's say the 20-day moving average in the market, and it'll turn sideways for a few minutes. Then the buyers come rushing in, and it goes and closes positive on the day. Well, anyone who had their stop set prior to that open, they're gonna have the stock stolen from them. So again, let's say I own the stock at 48.10. My stop is at 46. It opens at $45.90. It ticks lower for about 3-4 minutes, hits a low of 46.85. Did I say 45.85? And then it starts to recover. So I look at it and say, let's give it at least 5 minutes. If the stop was at 46, now here it is 45.85 was the low of the first 5 minutes. I can't tell you how many times that has kept me in a stock that does go back and turn red to green. And what I'll often do, not often, but sometimes do, is say, there's nothing wrong here. In fact, if I was to throw this away, it would be a stupid thing. So now if I can buy the stock at 46.05, add to my position, average down, because it's a rare time when I'll average down, but my stop is, if I'm buying at 46.10, my stop on the entire thing is at 45.83, 2 pennies below that 5-minute low. Now I've lowered my cost basis to $47.05 per share. And as it runs up to that 47.05, I might sell the initial position that I sold, that I purchased, the secondary piece, the 46.10. So now I've got my full-size position, and I've lowered my cost basis, and I'm break even on that, and I'll keep my stop below the low of the day, and it's just, again, a risk management technique. So now I've got this stock at a better cost basis, and I always hold on to, I'll look at it as just a psychology trick, is that, for me at least, is that I will sell my lowest cost basis first, because my highest cost basis.
Right.
Sorry for that. First, and I will look at it and say, now here's my position, and go from there. So again, if it gaps down in the first 5 minutes, so the bottom line is that, just don't set your stop in the first 5 minutes today. Don't panic and throw your stock away. That's what I'm looking for. If I look at a stock and I, tell subscribers, or it's my plan to say, I'm going to buy above $48.10 with a stop of 40. I don't know why I'm saying 46. My stop would likely be $47.38, 2 pennies below a low from yesterday morning at 47.40. So if the stock gaps down to $47.35 below what was to be my stop, to me that says the trade's invalidated. The original structure that we were looking for is no longer valid. The higher low that